Ladies and gentlemen of the crypto space, we're live at 11:21 a.m. on a Thursday, approaching the end of the week, May 6th, and we got to figure out what's going on in the markets. Equities markets don't look so hot, seeing some bearishness. I don't see any signs necessarily of a systemic event, but that's why we follow people like Steven Van Meter, so on and so forth. We need those kinds of contrarian minds to look at the data to see what lurks beneath the surface, what monsters are positioned to jump up and start throwing lava bombs everywhere. So what I see generally is bearishness. I see some breakdowns on some larger ETFs. The index funds seem to have lost upward momentum in many regards. I mean, how many higher highs after higher highs can you breach without some sort of consolidation, some cost basis reset, or even some short periods of bearishness? So the correlation or inverse correlation between equities markets and the crypto space is just intermittent at best. Sometimes there's correlation and inverse correlation. So I don't think. I think in many regards we can see look at them mutually exclusive. A chart is a chart. A market behaves unto itself. There's clearly indirect relationships between markets. So ultimately, I'm staring at one chart in particular. A lot of I focus the vast majority of my portfolio on positions and structures and assets that I don't need to look at. And to do that is proper position sizing. And there's some great questions I'm going to get to in a second. And I've handled those types of assets with proper position sizing, so I don't have to look at them. I really only focus usually on one risk on play at a time. I hone in on a narrative and a story, and that's where I'll allocate a large chunk of risk on capital to grow the risk off capital, and that's the way this game is played. Anyway, let's jump in. Q&A with Noah. What's going on in the markets? I got nothing to talk about today specifically, so I just had to pick a title, any title, and let's get this party started. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Got winter in training in the house. Always a pleasure. RR, what's up, brother? SJ, he's still holding XTK. So I don't hold XTK per se. I mind liquidity, mind a huge amount of it. And the price action is a little bit volatile. It's a micro cap asset, but I happen to like what the team is doing. They've constantly delivered on innovative derivative assets, and that's meaningful. So you can hang your hat on a narrative all day long. Fundamentals tell you where to look, technicals tell you when to look. Ain't that the truth? Um, so even this position size is relatively small. So I'm in escrow. I can't access it if I wanted to, about 28,000 worth. That'd be nice if it pulls a 10x. I'd like that very much. Um, so your position size should be small, everyone. I wouldn't play a micro cap asset with a large quantity of capital. Honestly, that's nowadays for me, and I've historically I've taken extreme risk, obviously, to get to where I am. I can't deny that. I should never deny that. Um, but nowadays, this should be like 1% of the portfolio, a small allocation. And I couldn't liquidate this if I wanted to, and I don't want to. I want to see what happens with the team. The fundamentals have told me to look here, and I'm not playing at risk on, so the technicals are irrelevant. I have a similar position size for Mist and a similar position size for Visor. Method, I had a similar position size, and then it got cut in half, and that is what it is. That was a 15 chip that evaporated into nothing, and that is what it is. What can I say? Um, I hold all four, but they're a position size where I don't think about it much, and that is just a reality. No matter the size of the portfolio, respect that truth. And that's something that I think about often. That I could watch a 15 chip evaporate into nothing, and I wouldn't really think much about it. Everyone follows their own path. Don't play someone else's bags. Don't play someone else's cards. It's sitting at a poker table. You can't do anything about another person's hand. Just food for thought. Critical Mass Jim told my cousin to buy a Matic. This will pay for his wedding. He bought $100 worth to make me happy. No, no, no. You bet everything now. He hasn't answered me. Well, that's what I'm looking at. That's my risk on play. The narrative completely changed 2 weeks ago today when Aave and Curve launched, and I think that that's the story I'm telling. Now, clearly, it's up 25,000% in 2 years, but on a completely different narrative. That was an entirely speculative narrative. So this is the first leg up after critical mass liquidity emerged and DeFi projects started porting, which started generating velocity. Now, clearly, we have eyes on other monetary networks looking for breakouts of critical mass liquidity. Um, Eyes are on XDAI, Avalanche. Um, Eyes are on Loopring. ZK Swap, ZK Sync, stuff like that. These boys. I got these charts up. Of course, I closed it. Ethole, appropriate named website. I mean, Polygon's just way out in front compared to everything else other than Binance Smart Chain, $3.65 billion. And you look at Aave, $2.9 billion in Aave, and Curve's running around with 268 million. This is some serious capital. So this is liquidity that DeFi protocols are going to tap into, and then they're going to FOMO because they want to capitalize on this available liquidity. And as the DeFi protocol is poured over and deploy, that's going to generate the users that want to capitalize on opportunity, and that generates the monetary velocity. And bam, you have the spark that creates a new financial system. It's exactly what happened with Binance Smart Chain, and obviously the deal with Ethereum DeFi. Dr. T's in the house. Always a pleasure. Waiting for Matic, keeping me up late at night. Well, this is the chart I'm staring at right now. So what's fascinating is, or what's potentially, I mean, you could say that something looks incredibly bullish and then it turns out to fall apart. But this trend line, this formed late. These dips was that May 4th, and the first leg started on April 26th. That's a fair amount of time. But the fact that these trend lines line up specifically spot on with the first leg, it's a symmetrical triangle. It'd be nice if it dipped down here and you had more of a nice range between resistance and support. But when this trend started forming and it lines up specifically with the base, that's crazy. This might, if this plays out, I mean, this is the largest symmetric triangle I think I've ever seen. This is like 200% in the first leg. We'll see what happens. I mean, look here, we got another candle on the 4 hours. And I even look like we're looking at a short-term time frame chart. It's above the VWAP. It's above the guppies. Um, what other long-term moving averages? It's above the 50 SMA on the 1 hour. So here's the 200 SMA. So if this keeps going horizontal, at some point the 200 SMA is going to be above resistance, and 200 EMA is below support. So it's just getting compressed, and then you can see that really with the guppies on the 4 hour. Let's go over to the daily for a second. Yeah, the daily is just up a huge amount, but still, this on the daily, this looks like just a flag. You have a huge pole and just a structure forming at the top of it. So it's not clear, but on the 4 hour, it looks really cool. The compression of the guppies. This creates immense support, and the compression of the guppies is very consistent with the cost basis reset process. There's just people they're selling, but it's getting bought. They're selling and it's getting bought, and that's what cost basis reset really is. Um, a prevailing quantity of market participants now have this higher price point as their cost basis. And that means they can't sell unless it's at a loss, and the vast majority of participants won't sell if it's at a loss, so they'll wait for it to appreciate. And that's what triggers the bakeout process. James says, reasonable to compare Matic market cap with Binance market cap given the different tokenomics on the projects? Yes. While tokenomics are meaningful with regard to inflation, deflation, and supply demand balance, um, it's not really relevant to the overall market cap. For instance, tokenomics either produce a deflationary pressure, which constricts circulating supply, like the BNB burn type stuff, and now there's less supply, and equivalent or increased demand is going to be price appreciative. Um, so I wouldn't think about that too much. But generally speaking, the amount of liquidity that has flowed into Matic Polygon over the last 2 weeks is the narrative that I'm focusing on. I don't see any reason this can't catch up, at least at the top 10 and near BNB. Because that's the type of attention the a price appreciation is going to occur if a large percent of the market starts to focus on the asset and they start to think about the asset, and the emotions and all that fancy human stuff start to churn, and opportunity starts to be realized, and then that's what triggers price appreciation, generally speaking. And we'll see. I think it's really close. Look at this nice bullishness we're seeing pushing up against the 50 SMA in the 4 hour. I believe this 50 SMA in the 4 hour is literally the last. Oh no, there's the 200 SMA in the 1 hour. So if this does a nice rip through, and that's where we are. We're in a very compressed state. If this breaches this on the 4 hour and breaches trend resistance, um, we look for the breakout, the retest, and the higher high. I myself am in position currently, which is increased risk as compared to waiting for breakout confirmation. Um, But it's getting close. This is not going to take much longer. This will occur today. Date range. You're talking about like tonight, 12 hours, midnight tonight before. If it gets to that convex point, you don't. I wouldn't be surprised if it actually breaks out right now live on the stream. Squanchy's in the house. Always a pleasure, brother. Wave mappers, yes. Winner in trading, a whole small position for long-term play. Where should I stake or pair it? In what? What's important is uh, my rules. My rules are for myself. Obviously, you guys like a lot of my rules. If an asset is in your portfolio and it's not working, it's missing out on an opportunity. Um, so that's something for you to consider. Um, I will actually liquidate an asset if I can't put it to work effectively, which is kind of the way I feel about Uniswap, Uni. I feel there's better opportunity deploying the capital to other assets. It doesn't matter what assets you're applying capital to. You're thinking of the narrative of the story of the particular asset, but really all we care about is percentages. If it's up 20%, if it's up 50%, because we're working with dollars here, and that's what matters. So there's no difference between 20% rip to the upside for Uni or a 20% rip to the upside for Bancor. Same. So that's it's like if you drop a 5 pound weight out of a plane or a 50 pound weight out of a plane, which one's moving faster? They accelerate at the same velocity, 9.8 meters per second squared. It's not respective of weight, albeit you got drag and resistance. Like if you drop a feather out of a plane, the wind's going to carry it. So, but that's the point. All we care about is percent gain. So we talk about fundamentals because that does help skew our value allocation process to assets that are more likely or less likely more likely than less likely to appreciate. But all we care about is those percents. So if you have an asset that's not working, I think that's a missed opportunity. Food for thought. Food for thought. Winner in trading, XTK, that is. Yeah, I should read next comments before I reply to first comments. So for me, I can't do anything with XTK. This thing's sitting in escrow, but that's okay. Um, you know, a lot of my rules are goals, meaning there's always exceptions to every rule. Right now, I'm missing out on an opportunity, but I'm missing out on an opportunity because I cannot liquidate it. It has not vested yet, and I don't want to liquidate it. But what I'd probably do is I'd see if there's a USDC pairing, and I'd love to pair it with a dollar stablecoin. Um, or maybe I'll just pair it with Ethereum, which would be a relatively risky position, albeit how do you mitigate risk? Uh, You mitigate risk with position sizing. So maybe so I have a 28,000. Maybe I cut it in half and I'd sell half of it for Ethereum. I'd pair it for the XTK pool and get 123% of the capital. In that position size, I could stomach the volatility with that position size. Position sizing, guys, is how you manage risk and how you stomach volatility. You're not going to worry about if something gets cut in half 50% if it's only 1% of your portfolio. SJ, you're very welcome. Did you glide in the house? Favorite staking token? Are you still bullish on KNC? I don't have time to look at all assets. I think the KNC narrative is still solid. Their tokenomics were always solid. I think there's opportunity costs because the market doesn't look at it much, and that's unfortunate. So I apply my capital elsewhere. Uh, just with any other risk on play, there's ways to capitalize on KNC. And look, you could have KNC paired with Ethereum. There's a double volatile asset, so there's risk, but 1% of a portfolio making 134% a year, it turns into 2 and change percent in a year, and this will obviously get diluted, but you're obviously not betting on necessarily the yield, specifically with risk assets. If you really want yield and and you're getting like 50, 60, 70% on your money, you want dollars because then you have no chance of depreciation and you're actually deflation protective. So food for thought. What do you think about 76% BNT stake? Uh, BNT is, I have a large position in BNT. I think I like 40 grand worth of BNT sitting around. And I like this XBNTA. Is it up here? Yeah, XBNTA. That's a wonderful place to park BNT. So park a risk considerate, well position sized quantity of BNT and XBNTA, and it'll automatically compound significant yield for you. BNT is an extremely volatile asset. Folks probably for the last year have watched it go up in price, but I've watched 95% of its value get destroyed back in 18. So BNT is very volatile. Do I like it? Of course. Is the fundamentals incredible? They're extraordinary. Uh, Technicals, any of these assets could get completely obliterated. Maybe that's my trauma talking, but what are we but our history and experience? So watch the position size and be prepared to liquidate assets in case of a systemic liquidity event in the macro financial system. FM, people keep mentioning Truebit. I don't know what it is, and I don't have much time nor interest to look into it. I don't have any capital to deploy to it. John Schneider, do you worry that with all these EVM compatible protocols, BSC, Polygon, Phantom, that the liquidity will dilute too much? No, because there's quadrillions worth of liquidity in the macro financial system. The amount of capital in the crypto space is basically zero. Food for thought. Um, so if you want to play that angle, like you're thinking dilution in the overall direction of the markets and what'll happen in like 5 to 10 years, for me, that play is curve, and particularly a VE curve position. So there's like $120 billion in Ethereum DeFi as per DeFi Llama. Haven't checked in a bit, but point being, if now all of a sudden there's 10 trillion and Curve is processing $100 billion a day, VE Curve is the position folks are going to want to have. That could potentially be an incredible recurring revenue stream. It's a heck of a deflationary protocol curve, which is extraordinary because it's very inflationary. So the inflation is counterbalanced by a stronger deflationary force. Absolutely fascinating asset. There's no other asset in the crypto space that really hits the monetary policy, check marks the way Curve does. Bitcoin COT is heavily bearish. What's COT? But Bitcoin. I don't mind the price of Bitcoin. I don't think about it much. Bitcoin's a collateral asset, which means I use it to borrow dollars, and those dollars I put to work in a risk-off way. I literally take dollars out of Bitcoin and put it on the curve, and I'm earning 40, 50, 60% of my dollars. So if Bitcoin gets bearish and I have to rebalance my collateralization ratio, I'll take some of the dollars and I'll prepay some of the debt. If Bitcoin goes up in price, I have more dollars to work with, and that means I can make more salary. Demir's in the house. How you doing? I know you don't do price targets, but is a 10x for Matic at this point realistic given year to date? Yes. So my what I would like to see is about a 20x. A 3x is probably quite reasonable in the short term, and that's what I'm thinking. That's what I'm hopeful for. I put on Twitter a little earlier today that guy in the OTB betting on horse racing, smacking his butt. I'm like, come on, break out already. Let's do this. Let's get the race going. So where are we with Polygon? $4.7 billion. It's up 20 something thousand percent, which doesn't mean anything to me. The narrative completely changed, as I said. The technicals look ridiculous. And where are you comparing Polygon to? I'd probably compare Polygon first to Solana. So there's over 100% rip just to get to Solana, and Solana has barely any liquidity as compared to Polygon. Solana's not at critical mass. It doesn't have the seamless functionality and the smoothest functionality as compared to Polygon currently. The interop is there, but it's also it's more centralized overtones. My eyes are on Solana. I'm looking for critical mass liquidity, and this is probably where I would like to see the price action of Matic go in the short term, about 100% to the upside. This doesn't mean much with regard to what will actually happen. No one knows what the heck's going to happen, which is exactly why I don't do price targets to unintentionally trigger FOMO in anyone that hears me speak. That's not the way this game works. There's a lot of risk on the table. I'm holding a fair amount of Matic at this point, and it would be financially painful if it got cut in half or the markets turned south or was a breakdown. But and that's the whole point of a risk on play. You make your money with risk on. You protect your money with risk off. Risk on grows your risk off. So what I like to do is extremely concentrated bets, which I've done only twice in my entire time in the crypto space, and everything else was just growing relatively passively. But my big bet was Rook, which made a lot of money. And back in 2020, in March of 2020, was a Kyber, Banker, and Synthetics, and those were my risk on. Back then, I was obviously spread thin, and that there was a lot to handle. Didn't have the same experience I do now, and even when I was playing Rook, I didn't have the same experience, and I wasn't able to talk about my portfolio the same way I do now. But as of right now, I only have one concentrated bet. I don't have time to look at charts. I don't have that. Everything else in the portfolio, I don't have to look at, which is very nice because yesterday Cosmos started ripping about 14%. I bought my Cosmos for like 12 grand, and fun of it. What's it at right now? Ooh, Cosmos positions at 124. That's a 10x on Cosmos. That's nice. Cosmos, I'm holding. I bought it for a relatively decent price, and it's up 10x. And let it get cut in half. It is what it is. I'll check back on Cosmos in 4 years. The other one I don't look at is Ren. I can't look at it. I bought like 16 grand worth of Ren last year. The things are worth 293 grand right now. Jesus. But I can't sell it. It's locked up in Ren VMs. So it's just the way I look at, like, I don't even calculate the capital part of the portfolio. It just doesn't exist. It's not something I could liquidate. It's a multi-year play. It's long term. Um, I said the other day, long term, the HODL strategy is doesn't mean you know what you're doing. Um, Let me elaborate. You need to still be able to tell a story. You have to have an end game in sight. The end game for Cosmos is extraordinary because it's built into the China narrative and the BSN. The end game for RenVM is that it was bought by or partnered with FTX, and it's an interop solution, and there's billions of dollars worth of liquidity flowing into these DeFi protocols. That's crazy. So if there's no end game that's rational or reasonable, be careful with those assets that you say you will hodl. Just saying. Macro Mine, Noah, what strategy would you be using once you receive your frozen yogurt tokens airdrop? I will be using the sir. Where's the door to exit? I'm probably gonna sell it and just turn it into US. I'll turn it into VE Curve. Just saying. Miss Hacker, thank you, Noah. You're very welcome. 2710, the current XTK reward period ends today. Cool. Okay. So that means there's that's going to significantly decrease inflation. That could actually be was a disinflationary event, so to speak. Um, that could be it's a narrative shift. It's a monetary policy shift, or at least a monetary policy execution change. It's that we could have a critical event today or tomorrow or next week. That's a big deal. FM, commitment of traders. Well, elaborate. I'm not quite sure what that means. Bitcoin commitment of, oh, so it's a group. I see what you're saying. Uh, okay. People could be bearish. Um, that's the cool thing about me and Bitcoin. I don't care whether it's bearish or bullish. The narrative for Bitcoin has evolved past the need to even think about bearishness or bullishness. It's a collateral asset. I don't care whether it goes up or down in value. All I do is respond with regard to how I use the collateralizable asset. Ryan, sorry, I missed it. XTK not looking too good price wise. What gives? It's a volatile asset. Looks fine, 58 cents. I've seen it at $1. Um, yeah, it's not about what gives. I expect, well, look, expect this to get cut in half. If your portfolio is fine, if it gets cut in half, okay. If you cannot handle this asset getting cut in half, 50%, you're over positioned. Same with Visor. I bought Visor at like 70 cents. That's pretty cool. Kind of a little Rook moment, except I really over positioned in Rook, and that was a big risk on play. Method was at $1. Got hammered. Mist is hanging out there in the upper 100s. That thing was lower 200s at one point. My entry there was like 80 or 90. John says if Matic breaks out, I can't imagine QuickSwap not rip too. Makes sense, right? Yeah, sure. There's logic and rationale to say that. I don't have time to follow multiple assets, and I don't want to spread across multiple assets. I focus on Matic at the moment, but your statement is reasonable. L Loop, lots of development activity in Solana. Keep an eye on this L1. Development activity doesn't mean much to me. I want to see the liquidity. For me, there's a sequence of events. It's liquidity, fine. They're front running the dev activity, but if you don't have $1 billion or a couple, hundreds of millions of dollars, there's going to be no liquidity flowing through the developed projects. So my eyes are on Solana, and I'm looking for critical mass liquidity. For instance, either Aave or an Aave-like project, drawing in, $1 billion, and then I'll reevaluate the way I look at the situation. This is actually stark. I didn't see this. Look at this volume for Visor. That's pretty cool. Talk about a volume increase, sitting pretty much near all-time highs. That's pretty cool. I do not have Rook. I do not have time to allocate to multiple risk-on plays. Rook is an extremely risk-on play, just like everything. Matic's a risk. Everything. It's all risk-on. If you're holding an asset and it's not a small position size, or it's not dollars focusing on yield, it's risk-on. It's going to go up 200%. It could also get cut in half, 30, 40, 50%. And Rook did that. I wrote it from $65 to $800, and it went back down to $200. I don't have it in me. I'm too old nowadays. I can't. I'm not gonna take risks like that. I'm gonna take strategic risks. I'm gonna cut losses. I'm gonna play this thing like a surgeon, and I don't have time to apply excess value to multiple risk-on plays. Love the narrative for Rook. Rook is one of those assets. The fundamentals tell you where to look. and the technicals tell you when. It's just a matter of how you handle your portfolio and how much risk on you're taking. For me, one risk on asset at a time. Rent to 10. Can we meme that into existence? I would love that. Rent to 10's been a deal for a long time. When it broke $1, I was feeling much more comfortable saying rent to 10. Um, we'll see where it goes. Which very interesting position for me in Rook because it's clearly a very large position. But because of my cost basis, I could sit on this thing for a couple of years and let it get cut in half, 50%. I don't have any reason to really look at it. I consider like Ren a purchase. I don't even consider it part of my portfolio. The same with Curve. I consider my initial Curve position a purchase, and it's not something I could sell. But what I'm hoping for is that these purchases generate value, recurring revenue streams. They work over the years. Sonny's in the house. Always a pleasure. We had a great conversation last night. Good stuff. That was serious. That was a big intro into DeFi. And obviously, today in the stream, we're talking about very specific assets and very specific risk considerations in DeFi. This is looking really fired up, boys and girls. Let's see some volume pick up. This thing would look at this fire with the volume back here with the first leg up in the sim triangle. I know folks in the Discord forum. If you guys aren't in the Discord forum, there's a lot of alpha in there, a lot of smart people that are talking very rational about putting capital to work, taking less risk, structuring a portfolio, having appropriate, respectful position sizes, and it's really nice what has happened with the forum. It's been a long time that since I started the YouTube stream, and what we've seemed to have aggregated or grouped together is a group of people that think very differently, or at least want to try and think very differently. And we know for certain that the vast majority of market participants don't win. So the only way to win is to really be different. And that's a good hashtag that I post on Twitter from time to time. Be different. Think different. That's how you win. Winner in training, can you chart Rook and Loopring, please? I have a couple minutes left. Let me see what other comments are. Yes, you're welcome, Sonny. It's a pleasure. Always a pleasure. Miss Hacker, please add crypto option no. Yeah, I don't have a capacity to do that. I use this platform called LaunchPass. I'll ping them. I'll text them. There's not much I could do about it. I'll try my best. I've been I've been Googling, seeing, because obviously I'd like to accept crypto for people to come on. Um, I'll double down my efforts. Ryan, well, where is the Discord link? Would love to join. Sure, everything's in my Twitter profile, so I'll pop it in the stream. There you go, guys. It's right there. Let's take a look at Rook real quick. I got to wrap up the stream. I got a meeting at noon. Rook. Here, let's look at it on Visor. On Dex Tools. Technicals tell you when to look. Let's take a peek. Double bottom. Damn, that thing got hammered. 583 to 288. Goodness gracious. And obviously there's the 800 and change. I don't know. I don't know. It's not, this is not something that I would want to play around with too much right about now. You know, this was a big breakout. This leg right here, you could see. Here's your, yeah, it doesn't have many interesting trend patterns necessarily, but you can see obviously price action resistances. A breach of that line to the upside, and you probably hit 700 real quick. And then you got another one here. Boop. So nice price action resistance there. So there's your price action resistances. And if it breaches those to the upside, you're going to have some serious upside. Not something I could apply capital to right now. It doesn't have a solid trend formation. I mean, this is one of the most solid trend formations I'm staring at the moment. You know what's messed up? Let's take a look at Doge real quick, and then I got to drop the stream. Shorter term. This looks exactly like Matic. This is a ridiculous trend formation. So, and look at these wicks down. Look at this wick down. It stopped on the trend support. So, yeah, Doge looks ridiculously bullish. I would never spend any money on. I would never allocate. I don't have time. I don't have interest in the volatility, and more importantly, I can't hang my hat on the narrative. So when I tell stories at Thanksgiving dinner, I need to be able to tell something that I appreciate and I have passion for, and that's okay. It's okay that there's no reason to say I wouldn't apply capital to it, and that's fine. And plenty of people are gambling. I don't like the monetary policy. There's no deflationary pressure. It's not a collateralizable asset. It's stagnant equity, and by all means of analysis. So it doesn't mean it can't go up in value. So that's fine. It's a heck of a chart. Jesus. Can I pay directly? I don't have a capacity to accept capital like that, Miss Hacker. I'm sorry. I'm going to look into the crypto option. I would love to accept USDC. It makes sense. But otherwise, it has to go through the Launch Pass platform in order to be managed by the system. Do you also consider Bitcoin like a risk-on asset that can cut in half? You might want to sell. No, I do not. It's a collateral asset. If Bitcoin goes down in price, I have to repay some debt. If Bitcoin goes up in price, I can have more cash to put to work. So I don't think of Bitcoin's price much. Let it get cut in half. All that matters is my collateralization ratio and my liquidation price. If this got in 35,000, if Bitcoin gets hit to 35,000, I'll pay back some cash. I'll pay back 10, 15, 20 grand, and I'll reestablish my collateralization ratio. And that's the way I handle that. All right, ladies and gentlemen, let's wrap it up. 11:58 a.m. on a Thursday. As always, I thank everyone for joining. 59 people in the stream, 25 likes. We can do better. Think about the Discord. There's great people in there all day long. I'm in there pretty much all day long as well. I post much more technicals in there, and I do drop some of my ideas for risk on and uh, my alpha, so to speak. But my core philosophy stands. The vast majority of a portfolio should pursue recurring revenue streams. Put your capital to work so you don't have to. Use risk on to generate risk off. Curve is ridiculous. Yearn, convex finance when it finally launches. But if you have a significant dollar position in your portfolio, treat it as such. It's a position in your portfolio. Anything less than a significant portion of the portfolio, and I think that's opportunity cost. Dollars work in the crypto space. They don't work in legacy finance. Do consider the narrative of a 60-40 bond portfolio, whereas 40% would be cash in crypto because cash works. It earns huge amount more yield as compared to bonds, and it's deflation protective if we have a systemic deflationary event. All right. Thank you all. I wish you all a wonderful day, and I will see you tomorrow. Peace.